Hello, welcome to the Writing Gals. We are here for episode 41, Author Taxes with guest Bridget Baker, part 2. There was so much awesome stuff that we didn't even get to that we knew we just had to have her back again. So we're so excited to have Bridget. Sadly, Victorine is not here with us. She might pop in later. We don't know. She's off having fun somewhere with family. But we are going to check in with everybody and see what's going on. Judy, why don't you tell us what you are up to?
Okay, so I'm still working on my book, Kissing the Boy Next Door, but I had to take a break over the last couple days because my book, Protect My Heart, it was licensed for a game app on a phone, and so I've been working on things for that. I have to do like a character reference and a scene reference just so they kind of can get the artwork going for that game. So that's what I've been doing the last couple days, and I'm hoping to finish that part soon so I can get back to writing a little bit more before I have to start working on the screenplay for that. So yeah, I gotta figure out how to write a screenplay. That'll be fun.
Sounds a little bit scary.
I know. I'm like, well, if I learn now, then maybe I can try to write screenplays for the rest of my books, and then might as well try. So
definitely exciting stuff. We're all new to every level of this at some point, aren't we?
Yep.
And Amy, I know you've been finishing one book or trying to finish one book and launching another book, or what are you doing?
So I finished Her Boss, and I just got the edits back from my editor tonight. So when we close up, I'll be going through that, sending it to my proofer, uploading it onto Amazon tomorrow. Hopefully nobody finds it till my proofer can get it back to me, but keeping my fingers crossed. So launching that book, and then I am 13,000 words away from finishing my YA book, which won't launch until the end of February. So I'll have a little bit of time before then. And my publishing house has launched a book about a week ago, and that one just hit 768 in the store, I think, today. So I'm really, really happy. I finally feel like whatever was going on with Amazon last week is over, and books are starting to do what they're supposed to do when you put a ton of money and time and effort into advertising them. And let's see here. Yeah, I'm just trying to keep my sanity. It's freezing cold in Minnesota. So all of our kids have been off of school for the last 4 days because it's been like negative 35 degrees.
Colder than Antarctica right now.
It's ridiculous.
Like -7, I heard.
Oh my gosh, it's bad. So tomorrow they go back to school, and we're like, it's going to be like 30 on Sunday. It's going to be a heat wave. We don't know what we're going to do. So
Bridget's all excited down in the South, huh?
I know, I'm excited to go to Texas at the end of this month because I am ready for a vacation. But yeah, just always finding something for me to do and always having stuff to do. I tell my husband, I need to work today. And he's like, all right, by the end of the day, he's like, how much work did you get done? I'm like, not as much as I should have. So
hey, can I ask something?
Uh-huh.
Amy, how do you know that you have 13,000 words left of your work in progress? Like, I'll know how many chapters I need to write, but how do you said 13,000 words. Like, how do you know that's how much you have left?
Well, I've just written so many books that they're all about 50,000 words. I can't.
So you just know you're about 13 away from 50.
Yeah. Okay. And that's pretty much what I did. And I can tell right now where I'm at in the story. So they just kissed for the first time. And then everything's going to come unraveled. And so I pretty much planned it. So I'm like, yeah, I don't really see it's going to go past 50 because what I have in my mind, it would have to be. Like the things that really stretch your book are like those in between, like the first meeting and then like the kiss and then all the stuff unraveling and the black moment. So if that's not super long, then I know I've got about 50,000. I got about 13,000 words until I hit 50,000. And I don't really anticipate adding more words into it. So
for me, there's always a point in a story. We're getting so off track, but this is awesome. There's always a point in a story, like I'm on a roller coaster, and I know, like I wasn't expecting it, but all of a sudden it's like the downhill, ride to the finish. Because, like, sometimes it sneaks up on me, even though I know by word count I'm getting close, and all of a sudden it's like, oh, this thing is ending. We gotta start wrapping things up here. We got tie off.
Like literally in my mind, I am like I'm like, okay, they kissed, then this is gonna happen, this is gonna happen, this is gonna happen, this is gonna happen, here's the ending. So I know, like, boom, 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 it'll be done.
Wow.
So with that,
So anyways,
perfect segue. What are you up to, Bridget?
Oh, well, I didn't have a great, I got my next book in series for my Almost a Billionaire series outlined on Monday. And so I thought, oh, I'm going to start writing. I'm going to hit it hard. I'll get this thing drafted in a week. I don't know what's happening with this one. I think I got like 8,000 words the first day and I was struggling. And the second day I got maybe 5, and today I got like 2. So I sat down and hit my outline again and kind of re-outlined and got it on track. So I got about almost 16,000 words in. But it's like, for me, that's kind of crawling. I'm like, they're not flowing. They're hard words. I'm struggling. But I added it up, and that's like 96,000 words in January. So January was all right.
See, for me, I'm like,
I know, glad you're on camera so I can't shoot you with a dart gun right now.
like
10,000 days
days
have felt rough.
amazing for me.
Wherever you're at, there you can definitely get stalled out and slow down, and whatever your pace is, if you're not at your normal pace, it is super frustrating.
Well, I've got a book launching tomorrow, and then I have a book starting a Kindle countdown tomorrow, and I had a free day yesterday. So between those things, there was like wrap up from the free day stuff, and I wanted to update people on like how that went, and then newsletter junk. And but anyway, today got gobbled up by other stuff. So yeah.
Well, for me, so far I've written a grand total of, I should just check real quick because it's not very much. Let's see, it's like, 1,144 words is exactly what I've written today. And just, I was so stressed out and busy with other life things yesterday that my body was just like, I don't care if it's supposed to be your writing day. You're done. Shut down. Not happening.
I feel like you guys crank through stuff like you're always writing, but I kind of write in like a burst of like a week. I don't do it over all month, you know. I
think I'd get cranky if I just wrote like that. I think I need to spread out the joy a little bit more in my life. But yeah, so that's for me. I'm just trying to finish Movie Star because I'm behind on my deadline. Officially, as of today, I'm now behind, and my editors are waiting for it, and they just need to keep me on their schedule where they are, so I don't lose my place with them, and then everything would get super bad if I. So, anyways, this weekend is going to be fun because I'm traveling, doing fun stuff for my daughter's birthday, and still going to try and squeeze in writing where I can. So that's where I am, folks. Struggling. That's where I am. So let's talk about Bridget here. We're going to tell you her bio again, just in case you didn't see the previous episode. Bridget Baker graduated cum laude from BYU at age 19 and went to the University of Texas for law school. She was the youngest lawyer in Texas for 3 years. A mother to 5 children, she teaches kickboxing and is a room mom. She currently has her own legal practice and works as in-house counsel for a local company. She handles a variety of tax issues for her clients, including tax preparation for a select few, which she does not want to add to. She was sure to tell us.
Yeah. This is not to generate business.
After going to acquisitions with 3 different books through an agent, she met Atlanta Johnson at Storymakers in May 2018 and decided to give indie publishing a try. Her first series, YA Post-Apocalyptic, released September, October, and November of 2018 because that was the series. And she released her first sweet romance November 1st. She put out another YA romantic suspense this time last week. It should have been how many weeks ago?
It was January 2nd, so it was a while ago now. Yeah.
And has a new romantic suspense coming out. This
one's just a contemporary romance. Yeah, tomorrow, and a new one tomorrow. So
you guys be looking for that. What's the name of it?
It's Finding Cupid.
So go look for Finding Cupid, folks. The second in her Almost a Billionaire series. So now that you know her qualifications to talk to us about all this fun stuff, Bridget, is there anything you wanted to say before we get going on questions tonight?
There was one thing I was going to clarify because I feel like a couple of people asked a question about it after last time's, and it's not really on the outline, but we talked about home office deduction, and there was some confusion based on what I was saying, I guess. it is required when you're taking a home office deduction. It has to be exclusive business use. But I will say that practically speaking, it is in your house. And so it's not like any part of your house you're going to put a lock on the door and say no one can walk in there, or put a box in there or something, you know, if it's not related to this business. So, I mean, be reasonable. The IRS isn't insane either. So when you're trying to decide, like, what is my exclusive use area? I was telling the girls earlier, I have a bedroom that's like stupidly big. Whoever designed this house was not thinking. And so the bedroom's way too big to be a bedroom. And I think they were thinking we'd like a sitting room. I don't know. But what I ended up doing is carving off half of it as like my writing space. And I have an office that I do all my legal work in. And then I have a writing space, and they're not the same. I don't know why. I tried to write in the office and it didn't work. So, so like I claim that area. Do I walk in there? Not really, but you know, there's a door that goes out of there to the pool. So is it exclusive use? Well, we walk through it to get to the pool. So no, but yes. I mean, I don't use it. If I were trying to take my workout room upstairs where I teach kickboxing and stuff, if I were trying to say this area is also my writing area because I keep old notes there. I mean, that's not reasonable, guys. So like within reason, exclusive business use. Anyway, that's my qualification on that. Did that make sense?
Perfect. Thank you. So I guess we're going to jump in this week and talk about quarterly taxes, which is something that actually I ran into last year when it was the first year that I was making any kind of real income from this at all. And then I realized that this is something that I needed to figure out. And that is what prompted me to finally go and find a tax guy to help me set up some estimated payments. So let's just start with that. Sally Trainer wants to know, let's see, she made way more than expected her first year.
Yay.
Yay. What can I deduct? Should I really pay quarterly instead of once a year? What's a good rule of thumb to put aside in terms of percentage of income in case I don't have a lot of deductions?
Okay, so I'm going to kind of do what I did last time and just assume that you guys don't know anything about these. And then if you do, that's great. But basically the rule for quarterly taxes is if you're going to owe more than $1,000 in taxes, okay, and if you had earned income, well, if you're going to owe more than $1,000 and your income is coming from like self-employment, then yes, you need to pay quarterly taxes, okay? But then once so like your first year, Sally's saying her first year she made a lot more than she expected. So what happens is she's going to end up paying. It depends. It depends on when it happened. She probably should have paid some quarterly taxes. Like January, today's the cutoff, so she should have mailed some off today. She probably talked to her accountant and took care of that. But I'm trying to think. I don't know whether we're looking for in the question how you calculate next year's or whether we're looking at the first year. What do you guys want me to talk about?
Well, the thing for me was when as an author, at what point do you know, okay, I need to start paying estimated payments or quarterly payments on my taxes? Because so in 2017, up until November, I think I only made, was it 2017? Like a few $1,000s, you know?
Right.
And then last year was the first year of a real full-time income that I earned. And so that was when I know, oh, okay, so this is something that I'm going to need to do. But what's the threshold where authors need to know, okay, this is when I need to start doing estimated taxes?
Okay, so here's the thing that makes estimated taxes simple for a tax preparer and complicated for a person, okay? Because when I'm telling you, if you're going to owe $1,000 or more, you should be paying them. The question is, how much are you spending? So let's say that, or, you know, what were your expenses and what's your tax bracket? So all that factors in. So when you're looking at it, let's say, especially, you know, we have these little like chart, like what am I, a chrysanthemum or a lily or a lavender, you know? Well, are you looking at gross or net? Are you looking at what I earned total or what I earned less what I spent? Because then I am a much less impressive flower, okay? So when we're talking about quarterly taxes, we're really talking about net, not gross. So the question is, if I earned $2,000 in a month, but I spent $1,500, well, I've only really made $500. And if my tax bracket's 20%, then my taxes on that $500 are going to be really low. And if I had any other expenses, you back it out. So what you need to be doing, really what you ought to be doing as an author anyway. I showed you guys in the last podcast, but I have this little notebook and I said, these are my startup costs, okay? And they were all for 2018. So I said, my startup cost came to $2,700 or whatever it was. Okay, $500, whatever yours are. They could vary dramatically, whether you're paying for a ton of software and promotions and a website, or whether you figured that all out on your own and did it on a shoestring because you're better with tech than me. I don't know. But whatever your startup costs are, get a feel for what those are. Then look at what they are for a book. My startup costs were $2,000. My startup costs for this book were $1,500. $3,500 is my expense. And then kind of once you start to get to where you're going over what you spent, then start subtracting out, obviously, your promo costs, your all of your other advertising expenses and all that. And once you start to get to where you're thinking, let's say I'm in a 20% bracket roughly. And so see, it varies too based on what your spouse makes. If your spouse makes a lot of money, your bracket's going to be higher. So you're going to get to that 1,000 faster. So let's assume that you say, I've made a profit of $5,000 this year. Probably going to want to pay something in quarterly taxes. Your first year, it's like trying to hit a moving target because you don't know what all your expenses are until you start looking at it. And you're like, oh, home office deduction, maybe a little bit of mileage. I bought a laptop. I can count my cell phone. I can count my internet. Wow, I took a loss. Suddenly you didn't need those quarterly taxes, right? But after your first year, I think this is probably more useful because in the first year, a lot of it's going to be really confusing, especially for a new time author. Like, what expenses can I take? Watch the first one, get a feel for what all those are, figure out where your baseline is. Because I would tell Sally, if I were her tax preparer, I would say, let's say your profit, not your gross, but your profit for the year in your mind was $70,000 or something. Okay. Now what else can we take off? Because I would say, now we can deduct your desk. We'll take a depreciation, 179 bonus depreciation on it and deduct the full amount. We can take a home office deduction. We can make an IRA contribution. We can make, I'd start saying, how do we chisel away at this 70 grand? And probably at the end of the day, you'd have 25,000 in income or 30,000 in income. And at that point, it's a much more manageable number. So what you want to do is once you establish your baseline, you say, my gross is 70, my taxable income from that is 35 or whatever it is. Then we're going to take that, and the general rule for taxes is that you have to pay 90% of what you owe for the current year or 100% of the last year, and there will be no penalties, if that makes sense. So, but of course, with writing, so much of it has to do with how many books came out. So it really makes it a sliding scale. So I would recommend that if you have a tax preparer, or if you're going to find a tax preparer, the first question I would ask them after you figure out if they're a good fit for you is, how much do you charge to do tax projections? Because most of my clients right now are complicated, the ones that I still handle. And I have to do a tax projection for them 2 or 3 times a year. So after we do their taxes, I tell them, this is what I think next year's will be. Are you anticipating your income's the same? Yes, I am. Okay, great. Then I'll check in with them around June when they're paying their second quarterly, and I'll say, is your income where you think? Did you change jobs? Did you have more expenses? Did your income go down? And for you guys, for authors, I would say, did you put out less books? Did they not do as well? Were your advertising costs more? What happened? Did your book take off and now you need to pay twice as much? Because if you make over $150,000 a year, that 100% of last year's is out the window. It's 110%, or you pay penalties. But the bigger issue is you just don't want it to be too far off. So often people judge their tax preparer by whether or not they get a refund. And that makes me nuts, because I'm like, whether or not you get, sure, I can get creative and try and come up with deductions. I can tell you that you want to write off stuff that you donate to DI. I can give you different suggestions, but at the end of the day, whether or not you get a refund has a lot to do with how much money you made and how much was withheld or paid in quarterly taxes. And if that's off and your expectations are off, you're going to owe more than, no one ever wants to pay, but you're going to owe more than you thought. And then all of a sudden it's my fault because I didn't get you a refund. So, that's the kind of, you want to manage your expectations there. So I would say take your baseline, whatever last year was, figure out if you think next year is going to be better or worse, and try and find a tax preparer who's either going to include it in the tax cost or who's not going to charge you more than, say, $100 or $75 or something to do a true up during the year, when you can say, hey, look, you don't need one in June if your income is right about where you thought it would be. But if you're making wildly more or less, then message them and say, hey, can you put this in? It should be pretty easy. I don't charge my clients for it. I just include it. But you want to talk to them. I would say anywhere between, depending on how complicated your return is, $25 to $100 to figure out whether or not you should be paying the estimated taxes that were prepared is fine, unless you just want to pay 110% of the prior year because you're over 150. That's fine too. Does that all make sense, or is it too confusing?
Michelle's muted. I guess I'm wondering. So I made a lot more. I'm like Sally.
Than you expected, or than the prior year, you mean?
Yeah, I mean, yeah. And so I haven't, like, I do my own taxes. And so I did, like, is it like a law that I'm supposed to be paying quarterly taxes, or can I just put it aside in a bank account to pay?
Yeah, no, it's a law, and they can assess penalties. It's not huge. So a lot of times people hear penalties and they're like, oh my gosh. Okay. When you're really hearing horrible penalties, it's because interest accrues quick over time. And also, if there's fraud or if it gets over a certain amount, then the penalties start to double up. But really what that means is they're going to charge you interest for holding on to your money. Basically, the government really wants you to be paying at least 4 times a year, because if you hold your money for that whole extra year, you could have it invested making optimistically say 10%, and they'd really rather just have it now. So they're going to assess penalties if you owe a certain amount and you haven't paid your quarterly payments. Now, whether them pushing for those penalties is hard, because what if you earned $90,000 in December? So that gets a little bit tricky. Like, are they going to push for the penalties? I don't know, but they could. And they could actually come in and say, look, you know, when we get your report from Amazon, which we asked for or whatever, it says that you got all this money throughout the year. You didn't get it all in December. And then you're going to be like, I didn't. So, all right, here's your $800 in interest or whatever. Does that make sense?
Yeah. Okay.
So it's like a possibility. You really should be paying quarterly payments instead of just setting it aside.
Okay. Because that, like, most of my money, I guess, didn't come in until, like, my biggest month was like August. So I didn't get that till like
so
October.
That's when, right. So that's when you want to reassess there and say, okay, look, I made dramatically more, but it all happened in the last 4 months. So maybe step it up a little with your quarterly payments at the end. Because if you don't, they're going to assume that you made all of that over the course of the year, and it's going to look even worse. So a lot of times, like, my husband's income kind of fluctuates based on, he's paid hourly, but if he works a ton of hours, he gets more. If he works less hours, he gets less. So if he works a ton of extra shifts because we need extra money at the end of the year, then our quarterly payment at the end of the year, I just bump it up, it's higher. Or sometimes that happens at the beginning of the year. So the IRS with us has a pattern of sometimes the quarterly payments are high or low, and I'll do a projection and say, actually, we're going to get a refund. So then we don't, like right now, we didn't pay a quarterly payment at all for the fourth quarter, because when I factored in that we were going to hit that, remember I told you guys about the 20% that business, that self-employed deduction. Okay. I was like, oh, great. Well, we overpaid on our first 3 quarterly payments, so now we don't have to pay anything in the fourth quarter. Yay. So we didn't pay one. So those can fluctuate, but as long as the government's seeing that you're actually making them and then your tax liability isn't way off, then you should be fine.
Okay.
You guys still look confused.
I'm like, I guess I better just get me a tax.
Well, and I just
doing it on my own. So like,
that's why I got a tax guide, Judy, because it scared the heck out of me.
Well, so here's the thing though, guys, you can always be safe by paying, as long as you're under 150 grand, just take whatever, like let's say your tax liability for 2017, okay, was $10,000. Then just pay $2,500 a quarter for the next year and you'll be fine. If you go over 150,000, then instead of paying 2,500, you need to pay like, 2,900, whatever it is, 10,000 plus that 11,000 divided by 4. Okay. So 2,750 or whatever per quarter. And then you won't be subject to penalties. You might owe more or less at the end of the year, but the IRS won't get mad at you because that's a safe harbor, right? So, you can comply with that. If you don't want to get a tax preparer, you don't have to. Just pay your quarterly payments. Like use this year as a baseline and say, okay, this year my tax liability was $5,000. So I'm going to split that into 4 payments and I'm going to make them over the next year. And, the quarterly payments are weird times. I'm not sure exactly why they do that, except that I think it's because you don't know your tax liability to create your baseline until April 15th. So the first one is due April 15th, which makes the next one really close. It's like June 16th or 17th, I think. And then September 16th and then January 15th. They're all really supposed to be on the 15th, but they get shifted. So I'm just giving you the dates from this year.
Judy, from what I've seen, the tax dates that you have to pay your payments are all listed on the IRS website. As well as the form to print out to send in with your payment.
So I'm not as familiar with TurboTax, but it should auto-generate when it sees that your income's coming from Schedule C. It should auto-generate the payment coupons. They should be part of your return. They are when I populate my return. They should come up and it should have like 4 quarterly payment coupons. In fact, since my legal work is all self-employed, the IRS sends me coupons in the mail. It doesn't have an amount on them, but it sends them to me. And if I didn't have them already generated with my system, I could just fill it out and send them. Does that make sense?
Okay, so like when I do my taxes this year with TurboTax, if I don't get a tax person,
right?
So so after that, it will print off the.
It should
things for me.
But if it doesn't, you should be able to. Like I said, I don't use that interface, but there should be a way for you. I'm sure you could Google, how do I generate quarterly tax payment forms or whatever coupons with TurboTax, and it'll tell you. I'm sure there's like a little box you can click or something, and it's just going to take, if your income's under 150, it's going to take whatever your tax liability was, the full amount for the year. It's going to divide it by 4 and generate those coupons. And you can always, like, let's say next year you say, I'm making way more. Oh my gosh. You should be able to just mark through, like it said, $1,000. You should mark through it and say $9,000. That'd be nice. Okay, you should be able to manually change it to whatever. The IRS doesn't care as long as they're getting a check. And then make sure that you keep a record of it, because if you use TurboTax year after year, my guess is that they save what you put in, I think. Yeah. So they'll probably auto assume that you paid whatever the coupons generated. So you'll need to go in and manually prompt it to say, that's not what I paid more or less, you know. So.
And then if you happen to pay.
See, now what I do is I pay my business. Every time I get paid, I pay my business expenses. And then any money I transfer into my household, like to spend for my house, that's what I tax myself. So I just put 20% of that in a tax account, and then every quarter I just pay whatever's in there.
Yeah, and that's going to be probably pretty close. Just keep in mind that as your tax bracket goes up, 20% may not be the right number, but it's still, honestly, it may. It really depends on what deductions you're taking. But that's not a bad way to do it. What you're basically doing is telling me that you're taking a floating line at all times of essentially 20% of what your profits will probably be, and you're paying those in. That's probably pretty close to what a tax preparer's software is going to spit out anyway. Okay. So it's within a margin of error. But the only thing you want to be careful of is you don't want to hit the penalties, though. Remember, I told you they're really interest. So let's say that you were off, Amy, by $1,000, okay, and you paid $1,000 less than you were supposed to pay on your estimated taxes. And the IRS sends you a letter. They may not even do anything about it, but let's say that they do, and they drop a letter saying, you should have paid $1,000 more in estimated taxes and you didn't. The penalty on $1,000, the interest, I don't know what it'll be, but ballpark, let's say it's like $50. So is it the end of the world? No. Are you doing a pretty good job? You're probably going to be spot on. Yes. And that will take into account the fluctuations of either way more income or way less than the prior year. So I just keep my eye on it. If it's way more, you really want to be careful, because if you go dramatically over, that's when you could actually get a significant penalty.
Well, and my cousin's a tax lawyer, so you
can't feel comfortable calling them and saying, "Hey, mine may be different. Can you run a projection and just tell me we're there?" Honestly, if you're using a preparer, it's easy.
Yeah, at the end of the year, we just say, "Okay, what's our percentage?" And he's like, "I'd probably up it a little bit because you were kind of high, so up it this next year." So, but I mean, you could always just pay taxes off of your gross, and then you would just always overpay, and then you'd always get a check, right?
And, well, so you can get a check, or what most people do that are self-employed like that is they'll just roll it. So like I have a client who consistently just says, this is 110%. I don't care what I make next year. I'm just going to pay it. And he just pays the same amount every quarter. And then a lot of times when we do his taxes, we say, oh, well, you overpaid, so we're going to roll this to next year. Instead of paying this for your estimated taxes, just pay this like $1,000 or whatever. So he'll get, like when we true up at tax time, then instead of getting a refund, he just doesn't really have to make his next quarterly payment, or he makes a tiny little amount. So that's always fine too. I just don't like people to hold my money.
Right. And that's what I heard. Yeah. Like we did Dave Ramsey, and he's like, why are you giving the government your money that you're not making any interest off of?
When you're studying taxes, it's called the time value of money. The thing is, unless you're investing wisely, your time value of money.
That money's going to like a trip to Hawaii. That's not.
So, it kind of, you. So just if you're the kind of person who's likely to spend it if it's laying around, definitely don't just hold on to it. If you invest wisely and you're making 12% on your investments, throw it in there until it's time to pay.
Once you pay the government, there's no way getting it back until tax season. So
that is correct. You can just pay them less on future payments. Yeah, that is correct. Until you true up, then hey. And if you're in California, a couple of years ago, you didn't even get it then. It took them like 6 months or 4 months or something to pay their refunds. That was a mess.
So on our live feed, Missy Ann had a couple of questions, and I don't know who's watching the questions tonight, but I thought it might be a good time to address it so we don't keep coming back.
Yeah.
She wanted to know if it's okay to wait to the end of the year to pay taxes. So we've already addressed that there will be penalties involved if you don't pay throughout the year. Just wanted to double check.
Well, that's correct. There could be. Some of it depends.
Potential for it.
That's correct. And a lot of it depends on how many deductions can you get? What's your spousal income? What's their withholding rate? Because what I see a lot of times is, let's say you have a spouse who makes, say, $100,000, okay, and they're paying $10,000 or $12,000 or something's withheld, and they're used to always getting a $2,000 or $3,000 refund when tax time comes around. And then the other spouse starts a business and has like $15,000 in profit in the first year. They just don't get a refund, and they tell me, "Well, why didn't I get a refund?" And I'm like, you need to talk to your wife because she made this extra money. So, you know, or like they'll start a new job and the new spouse will be like, I'm not having anything withheld. I don't want them to keep all my money. And then they don't get a refund. And they're like, why didn't I get a refund? I'm like, because you made $20,000 and you withheld $72. So, you know, so a lot of that, you know, like you have to really be thinking about how much are we paying? If you may not have to pay estimated taxes if you have a spouse who's having a lot withheld and you usually get a refund, but then don't expect to get a refund. So those things all kind of tie together. But yeah, I mean, if you do not pay your quarterly taxes, and you should be, in other words, like I said, you're making more than $1,000, or you would owe more than $1,000 in taxes on self-employment income, then you just need to recognize that there might be penalties. So
yeah, and she says if her income falls, what happens if your income falls? And then she would just adjust what she's paying if her income falls.
Right, because like I said, there are 3 ways to do your quarterly, to calculate what to pay. Number 1 is the safe harbor, 100% of the prior year if you're under $150,000 in income. Okay, if you pay that, there will be no penalties. You may get a refund, or you may owe a little more, but you're not going to have penalties assessed on it. The second one is if you're over $150,000, you have to pay 110% of the prior year, but there won't be penalties whether you owe more or less. And the third one is just 90% of the current year. And that is only works if you're making under 150 grand. When you go over, they're like, hey, you make a lot of money, you have to pay us more. But if you're under 150 grand, you can pay 90% of the current year. So that's why, you know, when Amy was saying like, what if I owe a little bit more than what I paid? And that's why I said there may be penalties, because if, let's say you owed 10,000 and you paid 9,200, I mean, it's 90%, so you're fine, right? It falls within that year. So you're within a reasonable range and you're okay. So 90% of the current year, if you can calculate that well, 100% of the prior year, or 110% if you're over 150 grand. So.
Okay. So Carolyn wants to know how much she should put aside for taxes. So is it going to be 20 to 25% based on your income bracket?
Yeah, that one's hard because it's really a sliding scale. Mm-hmm. So that's going to vary dramatically based on what deductions you have. It sounds like maybe she's saying, because when you put in parentheses in the US, I'm only talking about the US. So it sounds like maybe she's foreign and she's trying to figure out. I'd say 20 to 25% is probably a good rule of thumb if you're foreign, but I have no idea where you're going to be. It's going to depend a lot on like what your total income amount is. And I don't know. I don't do foreign taxes, like taxes for people outside of the United States who earned income here. I've never done those. So I'm not really, like a lot of the stuff I can tell you the answer without looking it up, but that one, I don't know.
Sounds like, I mean, for all of us, it's just going to come down to doing the taxes. And
there are a lot of income projectors that you can like search online that will be reasonably close. They won't really take into account all your deductions, but you could ballpark those. You could say I made 15 grand. I had about 5,000 in expenses. That gives me 10,000 in income. Where would that put me in a bracket? And frankly, if you're not making very much and you're in the United States, you're going to get a ton of other deductions that are going to come off of it. So that's such a complicated question, depending on other sources of income and deductions, that one gets hard to answer.
Yeah. So let's move on to multi-author sets.
Okay, I forgot, I was going to address something that there seemed to be some confusion online, and maybe there isn't because I saw some people, but Amy brought up the topic of 1099s. So I just wanted to say, if you are paying a cover artist, if you are paying an editor, if you're paying any of these people and you pay them more than $600, you are supposed to issue something called a 1099 miscellaneous, and there's 2 deadlines. So if anyone's freaking out, oh my gosh, it's today, that's the deadline that you're supposed to issue it and send it to the person. So the cover artist, whoever it is, that's basically putting them on notice. I'm going to report to the IRS this amount. You don't have to report it to the IRS till like, I think the end of February. You'd have to look it up, but I'm pretty sure it's the end of February, maybe February 15th. It's at least 2 weeks from now. The idea being, if you send that to them and you say, here's your 1099, and it takes a week or 10 days to get to them, or it gets lost or something, you can work all of that out before you try and report the number to the IRS. And then what if they get it and they say $750? You only pay me $600, and you're like, oh, whoops, I paid that to somebody else. Okay, so you can correct it and then send the right number to the IRS. So if you miss today's deadline, fill it out tomorrow and send it in. But this is my caveat, and this is what people were getting confused about, okay? This used to be super confusing, but the IRS miscellaneous form for the 1099 has gotten a lot clearer. If you paid someone via PayPal or a credit card, okay, you are not supposed to report that on a 1099 miscellaneous. It specifically says payments made with a credit card or third-party transaction must be reported on a 1099-K. Does that mean you have to report it on a 1099-K? No. Okay, if their income from that source, like let's say they get paid with PayPal, okay? Because my first cover guy, I paid him $750, $250 each for 3 covers, okay? So I should have to write him a miscellaneous, right? Except I paid him via PayPal. I don't know what he made on PayPal. If he makes over $20,000 on PayPal, then they're going to send him a 1099. If he gets paid a lot, then yeah, he's going to get one. Regardless, though, they are obligated to report their income. It's just that if it's reported through a credit card and you send a 1099 and PayPal sends one, it's double counted and it caused all these problems. So all these people that were getting paid with credit cards and PayPal were like pulling their hair out because they were getting a 1099 for the income from PayPal and a 1099 from the credit card company and a 1099 from the person who paid it. And they're like, ah! So now if you're paying with a credit card or with PayPal, do not send them a 1099 miscellaneous, okay? So if you don't want to have to deal with those, pay everybody with PayPal. You're like, hey, I'm going to send this to you with PayPal, okay? And then you have evidence and then so do they.
So what if you already paid, you already submitted a 1099 for somebody who...
Did you send it to the IRS?
Yeah, I used my my cousin gave me this website. So it sends it to everybody.
So what you need to do, what I would do is just send them a courtesy email and I would just say, hey, did you...
to the IRS or to the person?
I would send, because here's the answer. The answer is, as long as it's not double counted, no one's going to care. But if
so it's the person that's counting it on their taxes that got it double counted, is what you're saying.
That's correct. It's not going to impact you. You've reported it either way, but you don't have to report it. You can just include it on your own taxes if it's already there. So what I would do is email, like let's say it's your cover artist. I'd email my cover artist and say, do you make more than 20 grand on PayPal or credit card or however you paid them? Are you expecting to get a 1099-K from them? And if they say yes, then I would ask my tax preparer, whoever did the 1099 for you, to file an amended one, basically withdrawing it, because otherwise they're going to have a lot of trouble trying to tell the IRS that they didn't earn 800 here and 800 here. It's not 1,600, it's only 800.
Well, if Victorine was here, I could ask her because she's the only one I paid with PayPal and she's not here. So
yeah. So anyway, that's what, yeah. But so I just asked Victorine. I mean, it's a friend, so you can just ask her, say, hey, is this going to get double counted? Because you don't want her to have to try and explain to the IRS why that income was reported twice.
Okay. If only she was on with us tonight.
I know.
So just to clarify really quick, so I pay my editor through PayPal and I've paid her more than $600, but since it's through PayPal, I shouldn't have to send her the 1099.
Yeah. Now I guess I should clarify. Are you paying it through like a credit card via PayPal or through a check?
Yeah. It might be through my bank account through PayPal.
I don't think it matters. As long as it's through PayPal, it's fine. If you're writing them a physical check, then it's different. But if it's going through PayPal, you shouldn't be writing them.
What if this was a big discussion on like a group of people talking? What about if it's friends and family on PayPal? They were talking about how you shouldn't pay people, friends and family on PayPal or something like that.
Yeah, so that gets a little more complicated because if it's friends and family, then PayPal is not going to report it. So if you're so if you paid like Victorine via PayPal, but it was all friends and family, you probably should issue her a 1099 because PayPal's not going to include that in income.
Okay.
So because essentially that's like you sending them money. You're like, here, have some money, but it's not a transaction through PayPal, so it's not going to be reported through them. Does that make sense?
So it's just like a funnel or whatever.
Yeah, because PayPal, okay, so PayPal got into this big fight with the government a couple of years ago where the government came in and was like, you have got to be reporting this stuff to us because there's all this income changing hands and there's no way for us with W-2s, with 1099s. The government's like, let me make sure what's happening. And PayPal had no obligations. They were just doing whatever willy-nilly and people were getting tons of money and the government was like, hold on. So PayPal had to set up this carve out. They're like, look, some of our people are doing businesses, but a lot of them are just saying, hey, you paid for this vacation. I'm going to hit you back for my 300. And that shouldn't have to be reported as income by us or anybody else. That's just a friend giving a friend money. And we're just providing that as a service. So if you're not paying them, that's a good question. If you're paying them via PayPal, but it's sending money to a friend, you probably need to issue them a 1099. Okay. If you're going to claim it, you know, on your taxes. Because I paid my editor for a year or two on PayPal as a friend. And I didn't claim anything on my taxes that year because I was seeking traditional and I just didn't bother with it because that was my only expense. And I wasn't going to try to I knew I wasn't going to have income. So I just didn't mess with it. So those are gone because you have to claim those deductions in the year that they actually happened because you're a cash-based taxpayer. So.
Okay. Anyway. So it's not illegal to do or bad. It's just then you have to track it yourself and send a 1099.
That's correct. It's not illegal to send it. You can pay her however you want. You could pay her in yellow ducks, although that's not reportable for your income taxes. But like, let's say Victorine says, I mean, okay, let's get technical here. Let's say Victorine says, I am going to make you a cover in exchange for you providing this service for me. Technically, the IRS's position is that you guys need to value that and say this is worth $300 and claim it as income. Does anyone do that? Probably not. But yeah, if you are reporting it, if you're sending it as a friend, but it's still income, then yeah, you need to be providing a 1099. So that would be an exception to the PayPal thing. If you're not getting an invoice, because like my editor, I pay him on PayPal, but he sends me an invoice and then I click pay invoice. And it was the same thing with my cover artist. Sent me an invoice, but if you're sending it as a friend, that is not going to get reported. So you need to send a 1099.
Okay, I have another question about PayPal. Since you seem so like, you know how you can send people an invoice through PayPal? And then let's say you give them a cashier's check and then they go in and they say, this has been paid, and it gives you options of how it was paid. And you say, oh, it was paid by cash or it was paid by a check. Do you send a 1099 for that, or does that count?
Yeah, so if it's invoiced, then that counts as it was a third-party transaction. PayPal is going to report it was on an invoice. So it doesn't matter what you paid with, whether you paid with a PayPal balance or a credit card or a check, it doesn't matter. It was through legit channels. It's through PayPal. Don't report it. But if it was sending them money, it doesn't matter how you sent the money, although I think it makes you do it through like either PayPal balance or withdrawal from your bank account if you're sending them money.
Yeah, to do friends and family, it has to be just bank account. You can't do a card or anything like that.
Right. So in that circumstance, I mean, it doesn't really matter what you're paying with, whether it's a balance or a checking account, you're going to need to report that with a 1099 if you're going to claim it on your taxes. So.
Okay.
So, but as long as there is an invoice involved, you don't have to.
Right, because as soon as you're filling out an invoice on PayPal, it's triggering their reporting mechanisms. They're like, oh, this is a payment for a service received. So they're going to report it on their stuff.
Okay, am I muted? No, good. So this might turn into like a month-long series of tax questions.
Well, I don't know how much help I'll be on the multi-author sets, but I'll try and answer their questions. We'll see. I haven't ever done one, so.
I'm trying to see if we can sum it up just like a little bit, make it a little bit more quickly. Basically, I think what a lot of people want to know is if you are in business with other authors, how to handle the taxes for profits made from a project. So, like, do you pick if one author is collecting the royalties from the sales of the book and dispersing them to the other authors in the collection, who pays the taxes?
Yeah. So what should happen? Okay, I should have done like a little balance sheet. So the way it should work when you're dealing with this is that I'm assuming here that we're reporting this on a Schedule C. It's different if it's flowing through an LLC or, like a business entity, because then you're just going to write it off as a business expense. So it's going to go straight out. But if you're on your Schedule C, so let's say, and of course there's a difference too. If you're in a multi-author series, so you're writing your own books, then you don't have to deal with this because you're each putting your book up individually. Okay. So let's assume that this is like Victorine had that anthology. I am guessing, I don't know, she's not here, but let's say since her name was the biggest on it, the Christmas one, that she put it out, but there were 3 or 4 other authors and you're sharing it equally or something. Okay.
I was one of those authors, and yes.
Okay. So then she would be getting the money from Amazon, but then she would be looking at it and saying, we got $1,000. Okay. I don't know if you guys are pooling expenses. So some of this will have to do with like, how did you guys decide to do it? Is she paying all the expenses and then she gets reimbursed for them? So you guys will have to decide how you want to do that. You could do it 2 ways. You could say everybody's going to share in the expenses. And so we'll all pick a thing to pay for. Or in which case you would just include whatever expenses you had on your specific Schedule C because you'd paid for it. Or she could say, we expect there will be $1,000 in expenses between the cover, the editing, whatever. She could pay for all of it. And then she can say, the first $1,000 comes to me. I'm taking the full deduction for the expenses. And then after that, I'm going to split it out. Okay. However you guys came to terms on that, when she starts to split it out, she's going to make you a payment and she's going to issue you a 1099. I think that's the easiest way. And then she's going to report it on the Schedule C as either an independent contractor payment or a royalty. It doesn't really matter. But royalties, if she even pays you $10, she's got to report it. If she says they're independent contractors who worked for me for this book, then so some of it depends as a characterization. If she's saying these guys own this share, then she's paying you royalties and she has to write a 1099 even if you only make $30. So you guys can kind of agree in advance how you want to look at it, and however you characterize it, that's kind of what you're stuck with for the next however long the book is producing revenue. So that's something to think about. You know, if you're thinking the book's going to make a lot, then it doesn't really matter because you're going to have to issue a 1099 either way. If you're thinking, hey, this book may only make $200, then maybe you don't do it as royalties and you say, hey, we were independent contractors, but we're going to split, you know, whatever the income is.
Yeah.
So, but the easiest way to do it from your perspective to make, if you don't necessarily 100% trust the people, is say, you guys have to pay me royalties and put it in writing. You know, this is a royalty agreement and I get 1/4 after the expenses or however you work out the deal. And then pay them as royalties. And that'll go, there's a separate 1099 that you'd fill out for that, a 1099 for royalties, and you'd send that out.
Well, she's sending us a 1099, and I don't know how she's got it set up, but it didn't look like any particular one. But we were over the $600
right. Anyway, so you would have had to pay it either way. So yeah, so what you'll do is then when you do gross receipts, you'll include whatever you got from Amazon or wherever else, and then you're going to also include that number in that total amount. So you'll include it and she's deducted it, so it comes right off of hers. So actually what'll happen is there'll just be kind of like a net wash on her business income and on yours. It's just going to shift from hers to yours. So it's not really, when someone says who's going to pay the taxes on it, you're going to pay the taxes on your share and she's only going to pay the taxes on her share in the year that you receive them. So
yes. Okay. And so that's that situation. If you have one author who's not an LLC, the other situations where you might have questions come up is if authors form some kind of a group together, a business together, and then that would go through the business and not.
That's correct. You're saying, like, let's say you say, hey, Michelle and I are going to jointly write a series. We're going to have like 6 books. Instead of having them all under her name and then having her split out every single time, it'd be easier if we just had this paid to, let's start an LLC. Okay. It's going to be called Mishbridge, okay, and Mishbridge LLC is going to get these checks from Amazon, and they're going to be deposited in an account, and then we'll take the deductions out, and then we'll split it. And at that point, you're filing a tax return for the LLC. It'll deduct all the expenses, and then it'll split. If it's 50-50 or 70-30 or however it is, then you'll divide that income out, whoever's, because realistically, even if there's an LLC, there's someone who's going to be on the checking account and writing the check. So, you know, Michelle will be writing me these $10,000 checks, and then that'll come off from the LLC. You know, because an LLC is a pass-through. So that's what I would set up if you were going to try to do that. And then the pass-through entity, the LLC, is going to take off the deductions, send out the income, and the income will flow to your income for your business from the LLC. So it's actually fairly similar. It's just there's another layer you're going to have to file a tax return for.
Okay. I think that answers our next question too, so I'm going to skip it. And then Lindsay Armstrong wants to know, how do you know if a CPA or tax guy is knowledgeable enough to handle an author business?
Yeah, so the answer to that is really, honestly, I don't think an author, I mean, I know some people will tell you, oh my gosh, you need a special tax person for your author business. I think that if you don't have someone who's ever handled an author's taxes before, you just want to walk them through what's different about yours, like how you earn your income, make sure they're comfortable with it. But I don't actually think it's that complicated, except that, I mean, personally, it doesn't seem very complicated to me. It's a Schedule C. There are a couple of things that come up, but those are more like questions you would want to ask your tax preparer. But to me, it's more a question of how do you, as a person, find a CPA or tax person that you think is not trying to fleece you? And actually, I may hold this question if we're going to try to get to the structure issues, because I think I addressed the same concept when we get to that. That may not make any sense right now, but it will. Are we going to try and talk about structure in a minute?
We're going to try and get as far as we can. I'm going to do this.
Okay, so because we only have one more thing to get to before we get there. So just remind me, but I think I'll remember to circle back to how do you know if a CPA or tax guy is a good bet? And I'll get to that when I talk about structure in a minute.
Okay, perfect. So Inez and Cynthia are kind of asking similar questions. First of all, what are your tips on keeping record of your expenses, like QuickBooks or any other software? And then Cynthia wants to know, what happens when your categories for your expenses don't line up with what the options are in QuickBooks?
Yeah, so here's what I would do, honestly. So some of this depends on what type of person you are. I am the kind of person who wants to have a routine that I follow and then deal with all the numbers crunching later. So whenever I have an expense, I have a little notebook, okay? And I write it down in my notebook every day. If I spend money on something, I write it down and I put it by book, but that's because I want to be able to track it by book. For tax purposes, as long as it's all writing, they don't care. So you could just write down promos, but I keep a page for each book and I write it down. But when I have the promo, okay, I click one of two things. I either click print and then I just throw all those receipts in a drawer, or I've had so many for writing that I click print, save to PDF and put it in a file. So that's for my records. At tax time, do I need all of those receipts? No. Does your tax preparer need them? No, they just need a number. So for them, they will love you if what you do is have a spreadsheet that says advertising, $9,000. Office supplies, $9,000. So I would say when it doesn't line up with what's in QuickBooks, that probably means that your tax preparer doesn't need that as a separate line item. But that doesn't mean you don't want to give it to them. So let's say there's something that you're like, I don't know where to put this. I spent a lot of postage, for instance, shipping books to, I'm not saying I did. I actually didn't spend that much, but let's say that you did. Let's say that you spent $80 or $100 or $250 sending books to people for giveaways or for promos or for book bloggers or something, okay? If you did and you don't know where to put that, I would just keep it as a separate category, because where we put it in the software system is really, that's your tax preparer's problem, okay? So what you do is when there are buckets, put it in that bucket and say advertising, contract labor, blah, 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 blah. List those things out. If you don't know where it goes, but you think it might be deductible, list it. I have some clients, and frankly, there are a lot of things that are deductible some years and aren't others. And I don't mean it's because the tax code changed. I mean, it's because you either meet or don't meet a threshold. So like for instance, I was telling someone, or no, in the last thing I talked about medical. So for medical, if you have a year where, like we had one year where we had a kid who had surgery because she had an umbilical hernia. I had a baby and he was like 6 weeks early and I was on bed rest and it was a super high risk pregnancy and had all these complications. I was in and out of the doctor's office constantly. And then the baby was in the NICU for like 3 weeks. So my medical bills that year were astronomically high. We hit our deductibles, but we also paid all this extra, okay? So that year we actually had a medical deduction. Normally we didn't, but that year we did. Depending on where your charitable deductions are for a year, depending on where your taxes are and all of that stuff, you may or may not have things that are deductible year over year. I have clients that I just tell them, if you're organized, send it to me every year and I will check and see whether or not it's deductible. So I'd say if it lines up in a category, put it there. If it doesn't and you think it might be deductible, list it separately and your tax preparer will decide whether it fits and they'll drop it in the category. Because I'll regularly get stuff from people where they're like, office expense, $300. Paper, $150. I'm like, well, that's office expense, but okay. So I just aggregate it, $450. Okay. So if you don't know where to put it, your tax preparer will, or they'll say, hey, that's not deductible. Sorry. But a lot of times people will send me, they'll be like, well, I got charged all these fees by my bank. Oh, well, that's deductible. Or, you know, like, hey, I paid $2,000 to my management company for handling all of my investments. Is that deductible? Well, it is if it's over a certain threshold, depending on your income. So send it to me and I'll check and see if it is. So I hope that helps. I don't use QuickBooks personally, but if you do, that's probably a great way to stay organized and have it spit out a number for you at the end. I just put my stuff in buckets and write it down on a notebook so that I have all my stuff at the end of the year. And for my husband, he just prints off everything and drops it in a drawer. So at the end of the year, I spend, like when I did my tax projection, mine's already done for the year, but I sit down and I just assume I'm going to have something playing on Netflix in the background and I'm going to spend 6 hours going through all this stuff and putting it in piles because I got all my utility bills. I got to come up with them, organize it by month. So I make sure I have all the months there, add up the total amount so I can add it for the home office deduction. It's annoying, but I keep all of that stuff in one place during the year. I don't throw any of my bills away because I'm going to use those for my, tax stuff at the end of the year. And then I put it all in a bucket. My tax stuff every year is like this big. It's a huge pile of junk. Do I need any of that? No, if I were using a tax preparer, I wouldn't send him all that. My favorite client sends me, he has very complicated taxes and he sends me a piece of paper and it has a ton of numbers on it. And then I enter them. And then he sends me like 4 or 5 tax forms. And I'm like, great, thanks. I actually charge him 30% less than other clients that had the exact same taxes because his are so easy because he's organized. So, you know, that's the kind of like, keep good records for you, but don't send all that crap to your tax preparer and make them wade through it. But send them all the legit tax forms. If you get a tax form that says like, a copy of this was furnished to the IRS, send them that, because sometimes there are boxes and stuff that they need, but your business expenses you don't need.
Anyway, Danae wants to know if you are selling books at a book signing, and do you need to charge sales tax?
Yeah, so here's the deal. This is a really good question. It's probably one a lot of people have have the same question. The problem with this question is that sales tax is variable by state. So really, unfortunately, you're going to have to look it up for the state, because I can give you an example. If you're in New York, I only know 2 off the top of my head. If you're in New York, if you and I only know this because one of my friends was there, I had to look it up. But if you're in New York and you sell books and it's less than 3 days or less than $600, you don't have to report it. If you go to a 4th day or it goes over $600 in sales, then you have to get a sales tax certificate of authority from the state of New York in order to sell it. But guess what? It's an exemption. So you only have to do it on day 4 and income over 600. So you can still exclude those. So, you know, if you're talking about realistically, like I bought a ton of author copies. A lot of them I gave away as review things, or I sent them to Instagrammers or whatever. Some of them I gave to friends or kids' teachers or, you know, my kids, whatever. But also I've had friends that have said, hey, I was going to buy a copy online, but can you just give it to me? And they bring me, you know, $10 and it's $13 online, but I have an author copy for $5. So I give it to them for $10. Am I going to keep track of that crap? No, because in my opinion, they gifted me $10 and I gifted them a book. Here you go. See you later. You know, but if I'm actually going somewhere to sell them, like a book signing or a library or something, then yeah, then I would probably, sorry, my dog is feeling neglected, but then I would probably need to keep track of that. But you will have to, unfortunately, look that up by state and find out what the rules are.
If you do sell them, then you can't deduct those author copy, what you paid for them from your taxes, right? Because you were paid that money back.
Well, so that's a question, right? So it depends on how you're handling your accounting. So I put author copies as one of my expenses. And let's say it was $250 for my author copies. Okay. When I sell it, then am I going to deduct the $5 I paid for that book? No, because I already deducted the full amount of the author copies. So what I would do then is if I sold it for $10, I just include that $10 as income. And I will tell you that I don't mess with it for state tax purposes because I haven't sold very many, but I am including it on my income federally. So I did keep track of the fact that I've sold like 12 books or something to family and friends. And so I'll include $120 in my income. And I'm not going to include an offsetting $5 because I already deducted all of the expense of those books in another section.
But if you don't do that, if you don't count it as income, then you shouldn't deduct those copies from your.
Well, I don't know. I mean, I feel like those author copies, if you're not claiming the income that they're paying you, I mean, a lot of the author, I guess, if you want to be technical, you should back out the ones that you gave away as a gift or whatever, because technically you gave it to them as a gift if you're not claiming this income. But at the end of the day, I feel like, especially like, let's say my first in series, I bought a lot of those. I bought like 50 and a ton of them I gave away. And then people that read them went on to buy my 2nd and 3rd book. So was that really a gift or was it a business expense? Because I ended up I spent $5, but I got $5 off of the next 2 books, $270 or $350 or something each. So I made $7. So that's profit of 2. Plus they'll go on to buy other books. So to me, that $5 that I spent is still really a business expense because I'm trying to get readers and they'll tell who knows who else and they'll tell someone else and they want to sign copies. So I don't know. I feel like your author copies, probably you could expense them.
Okay.
But
a lot of the things that I've been to, they're usually organized to the point where they hand out tax forms that are applicable to your state and you fill them out right there. And then, you know, like they just kind of help you out there. So
yeah, especially if you're going to something like a story makers conference where they have like a book selling area, they'll probably say, you know, hey, this is the tax law. But if you're somewhere where like, let's say you go to a school visit or something and you sell 20 copies, you probably ought to look up what the rules are in your state and see, because I'm not gonna be able to answer it for every state. So
well, and we pay some sales tax with our business because we mostly do with universities and they're all tax exempt, but there's sometimes we don't. But there is a threshold too. Like if you only collected $1.50 in sales tax, they don't want it. They want like $5 or more. So sometimes you'll be like, well, I collected this and I figured this out. And then they're like, no, we don't want it. Pay us next time.
Annoying. Right. Right.
Okay. We're going to move on to structure issues and see what we can get done tonight. I
actually don't think the structure issues are going to be that long. So look, I read through all the questions. I feel like almost all the questions are asking the same thing. Okay. Yeah. What people are wanting to know is, there are a handful of structures. At what point do I need to have a structure? At what point do I need to be sole proprietorship? And so here's what it comes down to me, okay? This is an extremely complex determination to make. There are, in as much as I said that there's stuff that goes into quarterly taxes, a lot of things play into the decision of whether or not to be an LLC or a sole proprietorship, okay? So this is a dramatic generalization when I say this, all right? But I will tell you that my husband makes a lot of money as a physician, and I make decent money, or have in the past, as a lawyer, and both of us are sole proprietorships, okay? So what I always tell people is consider the source. I do estate stuff, okay? I was an estate attorney for years, and I still do a lot of that for family and friends, okay? Like wills and all that. And I've had so many people come to me and say, I think I need to get a trust. I think there are very few circumstances where someone legitimately needs a trust. There are certain circumstances where they're great, but there are very few. But if I'm a lawyer and I want to have ongoing revenue, and I set somebody up for a trust, they have to file an income tax return ad infinitum, like you're doing that forever. And they have to pay me to set up the trust. Then they have to pay me to transfer everything into the trust. Then they have to pay me to manage all the stuff that's in the trust. And if they want to change trustees, they got to pay me, or they got to do a court hearing. Cha-ching. Okay, so lawyers see this trust and they're like, how can I sell this? Because this is money in the bank for me. Okay, now I know that sounds horrible. I'm not saying that your friend, and to a certain extent, I feel like law professors have sold lawyers on why trusts are great, because I actually have some good lawyer friends and we do not agree. I think 98% of the time, the people that were sold a trust were duped. So I kind of feel the same way about an LLC or an S Corp for something like a writer. Okay, I'm not going to say that you never need it. There are certainly circumstances where you do. But here's what you need to consider, okay? If you get online and you read examples, they're going to tell you the number one reason that you want an LLC. Well, let me back up. The reason that they'll tell you you want an LLC is liability protection, okay? And I've had a ton of people say things like Cockeygate, it'll protect you. I really like Dave Chesson, so this is not me calling him out, but I got an email from him like a couple months ago, and it said like, oh my gosh, this is why you have to have an LLC, because at one point someone said that, you know, I had infringed on their, they said that my book was theirs or something. I can't remember exactly what it was. I honestly don't know how having an LLC would protect you from that. Like Cockeygate, do you guys know what Cockeygate is when I say that? Okay, where like they tried to get a trademark on the name. And so they were like, we own this name, no one can use it. Oh, you guys have to pull your covers down and change them and you can't use that title. Okay, until that nonsense got worked out, how would it have been any different if you had an LLC? I guess if you had legitimately infringed on someone's trademark and they were gonna sue you for it and you had made a ton of money and spent all that money and had none of it left, and they were going to try to come back at you and get your house or your assets maybe, because an LLC, the only thing it's going to do, the liability protection is going to keep you from creditors coming after you and lawsuits. How many lawsuits do you still have to defend against them unless you just want to let the LLC fold. And frankly, 90% of the time, the people that have the LLC haven't followed corporate formalities, so it's not going to protect them anyway. So if you're going to start an LLC and you really want it to protect you for liability purposes, you have to have your separate LLC account and do minutes every year with yourself. Like you have to have a meeting, you have to document all these corporate formalities. If you're commingling funds, if you're paying stuff with PayPal and it's not a PayPal that has been set up through your business, LLC, and your checking account, they're not going to adhere to that anyway. So to me, the liability protection, that really matters if you see that there is a possibility that you're going to get sued. I'm not going to tell you that you couldn't foresee a possibility, but unless you really think you're going to dot every I and cross every T after you set up your LLC, it's going to be useless anyway. And you're going to have to file a tax return for the LLC every year. And in a lot of states like California and Texas, there's actually a tax that's imposed on an LLC that is not imposed if you don't have one. So for me, it was a no-brainer. Do I want to pay 1 to 2% to Texas for this tax, or do I not? Well, I don't want to. I want to pay less money. So I also don't want to pay an extra tax return every year. Or, you know, I don't have to pay someone to prepare it, but I still have to pay for my software for an extra usable return, you know, if I'm not doing the unlimited package. So there are costs and hassles affiliated with it that I feel like people downplay because they want to sell you on getting an LLC. So I would say 95% of, it's not as dramatic as a trust, but 90 to 95% of the people that came to me and gave me all their circumstances, I would tell you, be a sole proprietorship. I don't see a reason to be an LLC. Now, let's talk about S Corps. And we can come back if you guys have questions, but S Corps, okay, the reason that people sell you on an S Corp, all right, is they'll say, you're making $100,000 or your business earned $100,000, okay? And do you guys know what self-employment taxes are? Okay, so self-employment taxes are the share that the government assesses on anyone who's self-employed. Really, if you're not self-employed, you're paying them anyway. It'll say like FICA or whatever. It's your Social Security and your Medicare payments, okay? But usually your employer pays half and they withhold the other half from you. So you're paying 7.5% or something like that. Self-employment taxes go up to a certain amount. And I don't remember off the top of my head what the threshold is for this year, but it's like 100 and something thousand, 110,000 or something like that. So up to 110,000, you're gonna have to pay Social Security. That's like 12.9%, okay, of your income, you're gonna have to pay Social Security on. And then 2.9% for Medicare just goes. Like you could make $1 million and still have to pay your 2.9% for Medicare because they get their cut. So that amount you will have to pay if you are self-employed. If you have an S Corp, bear in mind that you have to create an S Corp, so there are expenses affiliated with that. Then you have to adhere to all corporate formalities. Then once you've done all of that, you're going to have to file an S Corp tax return every single year. And probably it's complicated enough, you'll probably need to use an accountant unless you're really good at that kind of stuff yourself. Okay, so keep those numbers in mind. Now look at this, okay? When you have an S Corp, what they say is that you can pay yourself a reasonable salary, okay? The rest of that income can be paid essentially as ordinary income to you, but not self-employed income, okay? So what you are avoiding is the self-employment tax, all right? So you need to look at what is an average salary for your business. Okay, let's say a writer's average income is $50,000, okay? And I think, because what they're gonna look at is professional full-time writers. They're not gonna look at novelists because the average novelist probably makes $300 if you're looking at all the people that self-publish. But they're gonna say, let's look at the average professional writer, okay? And if they say that, they're gonna say, all right, so 50,000 or 60,000 maybe is a reasonable amount for you to pay yourself. You're still gonna have to pay self-employment tax on that money. So there's a 50,000 delta here. And you could say, look how much money I could save by not paying self-employment tax on that $50,000. Well, you can do the math. You can take $50,000 and say, I don't have to pay self-employment tax. It's just going to come in as ordinary income. That's the amount that you possibly stand to benefit with an S Corp. Now you need to offset it. I think let's say at the, does anyone have a calculator handy? I could figure out exactly what that is. I probably should have done it beforehand. But you could say like, all right, let's say I made $100,000 profit, 50,000 times, let's see, 2. So you could save, if things went really, really well, you could maybe save $6,000 off of that. But as your income goes up, the government's going to be less and less comfortable with you saying, I made $300,000, but I paid myself a salary of 50. They're going to be like, well, you're a really, successful author. How many books did you put out? Would you really be paid $50,000 as a salary? So they could always come back in and say, that's probably the #1 highest audited item, by the way. But let's say you save $6,000 a year by not paying self-employment taxes on that. One of the things I think people don't consider, and I'm going to use Judy as an example, because Judy, as far as I know it, you're the wage earner for your family. Is that correct? Okay, so when you retire, your Social Security benefits will be based on your income. Okay, so let's say we're super smart here, and your Social Security is never more than $50,000 a year. When you retire, your Social Security payout is based on that $50,000 a year. So you saved $6,000 maybe a year at the maximum, okay? But you paid an extra $500 or $600 a year for that S Corp return that was being filed every year, okay? And you have to remember to adhere to all the corporate formalities, and maybe you paid some fees to the bank because you're having a separate checking account or whatever. And you have to issue all these 1099s and other, you know, or whatever, and the W-2. So whatever extra you pay, let's say you pay $1,000 a year in expenses plus whatever you have set up. So you're only really saving $5,000 a year. But now, instead of when you retire, getting paid out as though you paid $100,000 a year in Social Security and getting that rate, you're going to get half that because you were really smart and you saved this money. So you better be putting that entire $5,000 that you're saving into savings. Because if you're not, you're going to end up worse off in the long run when you retire because you're going to get a lower retirement amount. Now, if your husband has a ton of income and you're better off taking half, because you know when you retire, you can take half of your spouse's Social Security benefit or you can take your Social Security benefit, right? Those are your two options. So if your spouse is making a lot of money, and so even if you maxed out, you're still going to be better off with half of his, then maybe it doesn't matter. But those are all things that it gets complicated enough that I would say talk to your tax preparer. But if your tax preparer gives you a hard sell on why you need an S Corp, and he's telling you that you need to do it, and the numbers are not very clear and don't take into consideration the long-term things like what is my Social Security payout going to be when I retire, that's not a tax preparer that you want to use. So, I mean, because you want them to be savvy enough and have your best interests in heart. You don't want them to be thinking, now I get to prepare one return for $600 and another return for $700, and I get $1,300 a year instead of $600. You need an S Corp, okay? Or you need an LLC. Like, you don't want that. You really want someone who's going to look at it and say, this is what I think. And further, that 20% deduction that I was talking about, okay, there's a huge offset when you're paying wages and you have an S. You're eligible to get that 20% if you have an S Corp, but you have to offset wages in the calculation. So you're not going to get the full 20%. You're going to get like 6%. So there are a lot of ways in which, now that just came up this year and I don't know how long it'll be around, but my point is the maneuverability when you have a sole proprietorship, in my opinion, outweighs the benefits of what I think are negligible liability. Maybe it'll protect you from liability. I mean, are you not planning on paying your cover artist? I feel like the liability or creditor issues that we have as authors are fairly minimal compared to, it's not like we have a rental property where someone might slip and sue us or something. You know, I mean, I think it's a little bit different in our business. So I would say 90% of the people that I'm talking to, I'm going to recommend that they just are sole proprietors. But, and again, some of that's going to vary by state. A lot of it's going to vary by what's your spouse's income. And a lot of it's going to vary by what's your income level. So if you have a higher income level, then maybe you could benefit by $5,000 or $6,000 a year by doing an S Corp. But just be thinking about exactly how much you're going to benefit and whether or not it's worth the additional hassle and the rigidity and not being able to change things out. And so you also start to look at, like, if you're going to be someone who's aggressively saving, you can do a SEP IRA if you're self-employed and save. I'm not saying you can't do it with an LLC, you totally can. But you can save enough money that you may be in a boat where you didn't really need, you know, to reduce your income by that much anyway. So like I said, sliding scale. Do you guys have questions or does that make sense?
I think I'm pretty clear on that. I wish I knew, you know, what our readers were saying, but I think it would be clear enough to move on to another question.
Okay.
I thought it was slightly different that I thought you could hit on pretty easily. People are wanting to know if they have multiple businesses or creative endeavors, can they do their taxes under one business umbrella or do they have to separate it out?
So the answer is, when I'm setting up a Schedule C as a tax preparer, the government wants a code to be entered that basically says like what kind of services these are. And the reason is certain services get treated differently. So like that 20% deduction that I was talking about as an example, because we were just talking about it, only certain things are eligible, and different types of businesses like my husband's and mine, law and medicine, are carve-outs where they get treated differently and actually worse than other businesses. So if you had a closely related business, like let's say Victorine, she designs covers and she puts out books, okay? I would make my business title publishing or like publishing services or something like that, or writing services. And then it could certainly cover both. You could certainly have one Schedule C or one LLC that handles both. If you already have an LLC, okay, let's say I want to look at like making jewelry and I want to look at writing. I wouldn't put those together. And the reason is, when you start to do that, you're going to have weird expenses and deductions that aren't necessarily the same. You're going to have a different workspace. So it starts to get odd, and also it's limiting. So actually, there are a couple of reasons why you might want to have them separate. Could you put them together? Maybe. Would the IRS ever notice? Because you're just dumping in income and it's all being reported. But you do start to get trouble with how are people paying you? Like, let's say that you are doing covers and that's one of your businesses. So do you want them paying, okay, I have my stuff listed under Purple Puppy Publishing. So on my Schedule C, it's going to say Purple Puppy Publishing. Okay, so if people were going to pay me for covers, would I want them writing it out to Purple Puppy Publishing? Maybe. If I do, then that's probably fine. You could put it under one business name. If I'm selling jewelry, do I want them making it out to that? I don't know. I guess it depends on how sloppy you are. It's super easy to have multiple Schedule Cs. So from a tax preparer perspective, I would rather you break them out because then I'm able to take a home office deduction on both. And frankly, if you have two different businesses and you have two different workspaces, even if it's only 200 square feet on one, it's super easy. The home office stuff is already set up. I'm already entering that on the screen. I can just click flow through. It's really easy from a tax preparer to just have a totally different space and then pull those same numbers through for like the insurance, the taxes, and all that stuff. So I would say you could, if they're closely related. If they aren't closely related, I wouldn't try to do it. And I noticed someone asked something about like if they and their husband were both in an LLC, well, then you can't claim it because then it's only single member LLCs are a disregarded entity for tax purposes. So you cannot claim that on a Schedule C. You're going to have to file the LLC tax return separately and you're going to have to flow it through. So like right now, if I have an LLC in Texas, the state of Texas requires me to file a form, but the federal government doesn't require me to file a separate tax return for that single member LLC. I can just put it on my Schedule C. If my husband and I had an LLC together, that's different. I have to file the LLC tax return, flow it through, get a K-1, put that into my tax return and enter that as income. That makes sense? You guys look super bored.
No, not bored at all. I think it's just a massive amount of information to take in. So
okay.
One other thing that I see that we haven't really addressed is how to do taxes with pen names, and do people need like a doing business as, a DBA? So anything you want to address that with that?
Yeah, so the answer is on taxes with pen names, you could have 27 million pen names as long as they're being paid under the same KDP account. It's all going to go in the same bucket, right? Because you filed with Amazon your like tax entity information and they're going to report it to you that way. If, however, you have filed different forms with them, so like let's say you have like nonfiction books and fiction books and you decided that even though you've got the same name, you want them reported under a different entity, that all depends on how you flowed it through. So when you go to set up your KDP dashboard, you like sign in and you fill out all this tax information. All the pen names that are on under one reporting thing, you're going to put those under one entity because all that income's coming to the same entity. Does that make sense? So like if you had an LLC, like, you know, the Mish Bridge, okay, how we're starting our own LLC for our new series that we're putting out. If we do that, we're going to have a separate KDP thing. That's going to be reported separately. We could use a pen name or not, but that's going to be under separate entities. So the pen names matter a lot less than who's the tax entity that Amazon's reporting it to.
Okay. So like for me, I use a pen name, but I gave them my legal name on my tax form. So does that mean
so you're only, so they just dump in one, I mean, they're going to dump from different markets, but they're just dumping into your account just one time for all your stuff flows in with one payment.
So basically, right. it's your taxpayer ID.
Yep, that's right.
You can have multiple pen names under one taxpayer ID, and if
that's
you
right.
have some sort of business set up, it would be the tax ID for that business.
That is correct, and that's how it's going to flow through, regardless of what the pen name is. You could have the same name and two different taxpayer IDs. They reported separately. You could also have 15 names all reporting under the same, and that's all going to be under the same business.
Okay. Does anybody want to look over on the live stream and see if there's anything else she needs to answer?
I just checked a second ago. I didn't see anyone. Someone asked about if you had any knowledge of Canadian author taxes, but I think you said.
Yeah, sorry, I don't.
And I don't think there was any.
There is a couple.
Something about writer's insurance. So is there? I've never heard of writer's insurance.
Well, they'll pretty much insure anything. You could probably get I look like a duck insurance, but so the issue is you could certainly, like, let's say that you're listening to what Bridget's saying here and you're thinking, I feel fine with doing my taxes as a sole proprietorship, but I'm a little nervous that what if I get sued, okay? No matter what assurances Bridget has, what if I get sued? I have a ton of clients who have real estate property And instead of doing an LLC, they decided, because it's super hard, by the way, to get financing in an LLC if you have a rental property. So they said, we're just going to do it in our own names and just own it and report it on a Schedule E, and that's fine. But we're worried, what if we get sued? Okay, then you know, like we just own it outright so they could sue us. So they went out and got an umbrella insurance policy that covers that, okay? And then they require rental insurance policies on that. You could probably find an umbrella insurance policy that would cover your writing business. But what you would need to do is look for an umbrella insurance policy that would cover a self-employed person. And then if you do have something come up, now, are they going to pay you for, like, I didn't pay my cover artist and they're suing me? No, that will be an exclusion. That will be like, you owe a debt. Please pay it, lady. But like, if there was some kind of bizarre, like, hey, we're going to sue. See, you know, I'd want to look at, I've never heard of a writer's insurance policy, but if you got one, if you procured one, that would certainly be a business expense. So I'm not sure what they were asking there, but that would be a legit business expense if you got one because you didn't want to set up an LLC, but you were nervous you might get sued somehow. Like, okay, so I have a friend who worked for Disney and then wrote a novel about Disney. Let's say he's worried Disney's going to sue him for defamation or something like that. You might want to get something like an LLC, or although then they could still sue your name because you're the one putting it out. But anyway, that's the thing, right? Like, let's say that's the thing that you're worried about, getting sued because you said something bad about someone. They're not going to sue your business. They're going to sue you because you're the one who's putting it out. So the LLC might not really help you there. But anyway. Yeah, if you did manage to get writers
bad, and no one will sue you, and you'll be fine.
Never do anything wrong. Like, put the word cocky in your title, and you'll be fine.
Just be perfect all the time. This is the takeaway for today.
Someone else asked, if you are sending 1099 out, do you have to send them for federal and state? Like, how does that work?
Yeah, some of it depends on your state. So like in Texas, there's no state income tax, so you wouldn't need to send it to Texas. But for your state, like if you live, I know Idaho has state income taxes. So yeah, but remember, you don't need to send a 1099 to Idaho if the person lives in Florida, right? So if you're paying someone who lives in Idaho and you live in Idaho, then you should probably send them a 1099. What I think a lot of times it'll just generate a state copy and you can put in like, so that's a little harder with us. Like my cover artist, I think, lives in the Philippines. So I'm like, or I mean, not obviously, I use Victorine for one, so not her, but like the guy that I used for my like YA series, I don't need to send a state anything for him. But you'll just need to look up if they live in your state and you know that, then yeah, probably try and send a state one. But
yeah, I was asking my tax guy, I said, so who do you have that you might pay more than $600? And I was like, well, I do have one cover designer that I will pay more than that, but she lives in Serbia. And he's like, oh. You know? Well. And I was like, I think I'll just find foreign cover designers all the time.
Yeah, right. It makes it, you don't have to file anything there. Yeah. So
I think that's all we had.
Yeah, we were way closer to on time this time.
Yeah, I think it went really well. And I think it's just one of those things that's super intimidating. And we feel bad that, you know, we can only really talk about U.S. taxes here, but if we tried to do international, it would just be crazy and terrible and wouldn't be much help, I think. Even if we
also as specific, as many times as I had to say, hey, this varies widely, it's really complex, it depends on your details. If we started trying to talk about foreign, it would get dramatically more so. We'd have to be, you're really in a boat where you're going to have to either try and look it up or find a preparer here who can look up the answers, because I probably wouldn't even know the answers to most of them.
Yeah, I think a good rule of thumb for authors is that you do need to find a professional to help in a lot of cases. I think for some of us, like I've done my family's taxes as long as we've been a family, and you know, I felt really comfortable with the basics. But then once it started getting a little bit more involved, it was worth my money to have someone else take that on, so that I just didn't have to worry as much about it, you know. And
you also want to, and when we're looking for how you find a competent tax preparer, look for someone who's, remember what I said in the last one, look for someone who's going to actively encourage you to do whatever you can to get your taxes down, and who will give you a good idea for what things you can take. Because they really ought to be willing to spend at least 10 minutes going over with you after you do your taxes to make sure that you got all the ones that you can take. Like, hey, I give a lot of stuff to Goodwill or to, you know, Desert Industries or whatever. Is that something I should keep track of? If they say, no, don't even bother, move along. Look for someone else who's willing to take the time to try and get your taxes down and make sure they're done right.
Yep. So, all right. Well, it's been amazing, and I wish that we could just have Bridget on call all the time to ask her questions. But I was pretty proud of myself because my 2018 record keeping was a giant disaster because I just was not expecting so involved of a process or how much money I would end up making this year. And I spent the whole morning printing off invoices. I know you could just save the little thing, but it made me feel better to like have them organized and by date and all printed out.
Honestly, I still print mine out.
Binder.
And one of the reasons I still print mine out is what if your computer crashes and then you get audited and you're like, I know there's the cloud and that would be great, but I don't always necessarily trust that stuff. I like to have both.
Yeah. I just thought if I was my stress level at trying to get it all prepared for that audit would just be astronomical. So now it's all in a binder, and it's like this thick.
But are you gonna hand that binder to your tax preparer?
I am not.
My work here is done.
I have a spreadsheet. I also have a spreadsheet, but I also have my binder of my
good for you
invoices and receipts. So I'm like,
that's perfect. You're not the brother-in-law, but whoever is the brother-in-law or a cousin or something. They will like you for that.
No, and then I have 2019 going
already. Right. So see, it'll be a lot easier because you just print them out already. So
yeah, that's my goal for the year, and a lot of it was due to you. So thank you very much for coming on. We really appreciate your time and helping us all out. So do we have any idea what our podcast is going to be next week? Is it gonna, nope. If you want to know, it's going to be a surprise. You will find out on our Facebook group a few days before because we'll go on and announce it and ask questions. So if you're not part of our Facebook group, you need to head over there and join. And we hope you all click like on our video tonight and subscribe to our podcast if you haven't already. Thanks for staying up late.